Talk Target, chip stocks, and much more. Sylvia Jablonski, CIO and CEO at Defiance ETFs. Sylvia, as we had said, positioning in the stock, expectations were very, very low. But what do you make, at least initially, of this quarter for Target?
Good morning, and great to be here with you today. Well, I think that 210 number is a great beat, right? 210 versus 148. So I think that they certainly exceeded the very low expectations. Target came out in August and sort of set a very low bar themselves on what they expected into the future, and it looks like they beat there. So I think it's a good sign. I think stocks like Target actually provide us a glimpse into the health of the consumer. And then you think about what happened with that inflation read yesterday. Price of oil has gone down a little bit. Perhaps there's been some ease, and that led to additional spending for Target. And then I think they also have some good tailwinds coming forth. November, December, we're going into the holiday season here, so they probably get another good quarter. I don't know long term about the conversation about locking things up. I mean, for me, 99% of the time I leave if I have to wait more than a couple of minutes. So I do think they have to sort out sort of the theft issue and the convenience issue. But longer term, consumer has wages and looks like they're still spending them.
We had a data point yesterday that really sent stocks off to the races on this notion that a soft landing is all but assured at this point. In that sort of environment, do you want to bet on a Target over a Walmart? The spread there is significant simply because Walmart has just more exposure to consumables, things that consumers actually need, and Target doesn't have that right mix. But in a soft landing environment under that scenario, is that a better Target environment than Walmart?
It probably is a better Target environment. You're talking about sort of staples versus discretionary. And if the consumer remains strong, they have, liquidity, they have cash, and again, the prices of oil are going down and there's some ease in inflation with the price of food and things like this, then I think discretionary spending and sort of their willingness to spend goes back up, and perhaps you get a little bit of tailwind with a Target. But, it sort of all depends, right? What we're worried about is what the Fed does in the background. There's always this sort of risk of a head fake, and having a couple of good reads, does not make policy for the Fed, as we know. So we do have to sort of keep an eye on what happens in coming months. But I think it's, certainly a good sign to see that type of CPI number and the direction of the 10-year and things like this.
Wanted to ask you about chip stocks. SMH hitting a new all-time high in yesterday's session. Really, really strong day, really strong year for semi stocks overall. I know you've been bullish on AMD and Intel. Those are two names specifically that David Tepper's Appaloosa has cut. Michael Burry of Cyan Asset Management has also put positions on chip stocks. That could be a hedge against the long. But just talk to me about where we are valued right now for this point in time.
Right. So I actually love chip stocks. I think that AI and, kind of quantum computing, supercomputing, machine learning, all of these kind of innovations are the next super cycle of technology in the next 5 years or so. And it's tangible, right? We have electric vehicles already. We're already seeing Microsoft deploy some AI. So I think these things are actually happening. It's less hype, a little more action now. But I like AMD. I think, there's the NVIDIA CEO talked about the $1 trillion conversion in data center. They own 90% of it, but AMD owns 10% of it. They're, kind of growing into soaking up some of the percentage from NVIDIA. They have some opportunity there. Revenues are expected to grow 9%. Gaming is starting to pick up a little bit again. They're in Xboxes. Again, they're sitting in things like electric vehicles. Intel, I think, is a turnaround story. They finally had a decent earnings read. They're, kind of finally on track to generate revenues as well. So I think when you have this kind of like running water, chips are the components of AI and machine learning, the future remains there in terms of an opportunity. And I know that they've soared, but I think, if you're thinking of holding this for another 5 years or so, this is going to pay off.